Ladies and gentlemen, welcome back to the channel. Tesla had a good day today, following the last 2 days that were not so good. And it actually caused a lot of you guys, a lot of investors, to reconsider the rally in Tesla stock, myself included. Like, things were not looking great heading into this morning's data release. In fact, futures last night for the NASDAQ were down almost 1%. And it was starting to look a lot like 2018. Now, let me give you a little bit of a backstory. Between October 3rd, 2018, and Christmas Eve, December 24th, 2018, the S&P fell 20%. On December 19th, 2018, Jerome Powell did pretty much what he did this past Wednesday. He shocked markets. Bit of a black swan event. And that caused a spiraling from December 19th through December 24th, where every day was down like 2%. Okay. Now, at the same time, you also had a government shutdown. That was, in fact, the longest government shutdown we've ever had in history. It was 35 days. And 800,000 government workers were furloughed. Okay. The deadline to fund the government's tonight. Jerome Powell was very hawkish. I don't know if he had a bad day or if he just didn't communicate things as well as he wanted to. I don't know what happened on Wednesday. But it looks almost identical to 2018. Now, here's the deal. If PCE would have been bad today, markets would have sold off something vicious. That's not what we got. We got a actually much lower PCE report than we were expecting. Okay, so that was a positive surprise. Now, investor sentiment was very negative following the Fed. The VIX spiked 75%, the spot VIX, that is. What's interesting is the VIX futures didn't really move too much, so the curve on the VIX didn't move much. Like, you have options on a stock that are like every 3 months or so. The options, like, outdated on the VIX didn't really go up. It was just a lot of short-term fear that came into markets quickly. Now, you had already seen the equal weight S&P died, right? Heading into the Fed, the internals of our markets were looking really, really weak. The RSP, the S&P kind of is masked by the by big tech, right? But the RSP, the equal weight S&P, the Russell, all of your other indexes were really just not in a great place. Okay, so I think that partly amplified some of the effect on Wednesday. But even today, we're still sitting with very negative readings on our markets. Let me just give you a run through of the ones that I look at. So percent of stocks trading above their 50-day moving average. This was up 5.15% today. So 5.15% of all stocks broke above their 50-day moving average today. But you're still only at 35% of stocks above their 50-day moving average. We were just in the 60s or 70s at the end of November. Okay, so you've seen this number fall in pretty much half, right? It's down 50% from November. Okay, now some of this had already been going on before Wednesday, before this week, right? You had already seen this kind of declining, but Wednesday was a huge blow. Now, when you look at the VIX, okay, the VIX spiked to about 28, okay? And you're back down to 18.47, which is still high, okay? You are down 23, or you were down over 23% today, but you're still sitting at very high levels. So sentiment overall, still pretty fearful. The AI Investor Sentiment Survey, bulls dropped 3 percentage points. And this does not incorporate the Wednesday move we've seen from the Fed. So the next report we get is going to be even worse. The CNN Fear and Greed Index is sitting at 30 today, which is almost an extreme fear. Like, when markets are this fearful, it's hard to get people to get more fearful, right? For people to get more fearful, that's where you see markets decline more. And from my standpoint today, following the better than expected PCE data that we got, that is a big sigh of relief for markets, because now it kind of opens the door for maybe some cuts next year, right? And let's take a look at what the markets are pricing in. And yes, we will get to Tesla. For January 29th, it's all but certain, for the most part, we're going to get a pause. We're not going to get a cut in January. But where things really are starting to move is around March and around April. So now, following this PCE report, we are expecting the first cut, or the next cut, April 23rd, 2025. Previously, we were not expecting our first cut until July. So we went from July, now today, to April. Okay. And so, that's obviously a positive for risk on areas. Russell, equal weight, that's why they really outperformed today. Now, Tesla did not outperform today relative to the broader markets because it was hit with a lot of fake headlines about 700,000 vehicles being recalled. That's what hit the headlines. It was an over-the-air software update. But the algorithms see that as a recall for automakers. That's not, great, right? That's not an optimal situation. And I think that's really why Tesla was held back today. But what you've seen under the surface was actually a lot of very bullish positioning. Some of these single options trades are targeting January 31st, that expiration, January 17th, 460 calls, 450 calls with break evens closer to $500. And they're putting sometimes millions of dollars into these trades. That suggests to me that, in fact, you may actually get a much larger rally for Tesla stock. In fact, you may get a short squeeze. As I've said here on this channel many times before, do you really, in your logical right mind, want to be short on Tesla in 2025? If you're logical, probably not, okay? 2025 is going to be Tesla's year, okay? I mean, the stock could double from here, in my personal opinion. Okay, that's just my personal opinion. You could be $900+ per share by the end of 2025. Robo-taxis are going to be launching here pretty soon. We just had news even yesterday that was really overlooked because of the market volatility that Tesla is in talks with Austin, Texas about their robo-taxis, right? So there is a lot going right for Tesla. And I think it makes sense for hedge funds and institutions to cover on their short positions heading into the end of this year. Now, the gamma squeeze that we've currently been seeing in Tesla, that has been very strong. And even today, you had 326 different trades totaling $270 million with a positive order value of 74%. 74% positive order value for options is a pretty damn good number. Now, we've seen better, of course. Again, consider the headlines that came out today about the recalls. That really put a damper on Tesla. I think without that headline, Tesla would be up 5 to 6% today. Okay, but it's something the markets will eventually realize, oh wait, that wasn't bad news. That was nothing. Okay, and I think with the strength we've seen from Tesla, if we can get the government funded, there is still the possibility of a short squeeze next week and even into January. Now, I want to be totally honest with you guys. Since really the election, since markets took off since the election, I was concerned about a Q1 correction, mainly because expectations were too high and people were too bullish. But now, even since Wednesday, things have changed. Okay, all of your sentiment readings are bearish, right? It's hard to get a further correction when everyone is already super bearish. It's like you have to see the progression of things getting worse, right? To continue to see that downside, things have to get worse, they have to get worse, they have to get worse, and more fear has to build in markets. The second things start to get better, you get a good data report like PCE this morning, you get a sharp rebound, right? But even though you did see that sharp rebound today, you're still sitting at very negative levels for markets. So I think to get a larger correction, a larger pullback, you probably need to see more bad news. Now, the government is not funded yet, okay? There's a possibility the government shuts down, okay? And maybe by the time this video is out, the government will have come to a deal or whatnot. But if they do come to a deal, then I think that really does power the next leg higher for Tesla and our markets. Because just to get back to a more neutral sentiment here, you would probably see a couple really good days in that process. Now, if we want to get back to like, greedy on the CNN Fear and Greed Index, for an example, yeah, we're far from that. We're at 29 today for the CNN Fear and Greed Index. It actually went down. Okay, so to get back to greed, I mean, it's going to take a lot of work for markets. And how much more do we fall? Are we really going to fall into extreme fear? I mean, I think you'd have to see for, like a large government shutdown, 1 million workers furloughed. Like, I don't think anyone wants to see that happen, especially not the Republican House and Republican Senate, Republican president, as they head into a pretty much uncontested next year or so from the majority standpoint, right? They don't want to see a government shutdown. They don't want to unnecessarily hurt the economy, right? So from that perspective, I think the most obvious thing is we probably get a funding deal over this weekend, and that is going to be very positive for markets. In that scenario, I could definitely see the gamma squeeze and a short squeeze picking back up again for Tesla. In fact, this may have been a very healthy thing if we get the government funded, because Tesla's RSI was at 84. Like, it could have went higher. It could have went into the 90s, but now you're at 67. So now if we get back to that 488 level, the RSI might be in like the low 70s, mid 70s. There could be a lot more room now for Tesla to rally. And I think it's interesting because if you wanted to trade Tesla into year end or the first couple of weeks of January, the quote unquote January effect, I think you have a better entry point now than you did before from the standpoint of options as well as the stock. You got a $40 discount, essentially a 10% or so discount from that 488 high that we hit. If we could rally into the 500s, which was previously what the options were pricing in, remember that video I made, $535 per share is what the options were pricing in by, what was it, January 3rd, January 10th? I think it was the 3rd. So you got a better reset here. And as long as we don't get hit with any more really bad news over the next couple of weeks, markets may be resuming their path higher. Now, maybe it's a more broader based rally. That would be, really good. Like the RSP that did well today. The RSP outperformed the S&P. That's something I've been waiting to see. Okay, so from these standpoints, I think it looks really good for Tesla. Again, logically speaking, it makes sense to cover on short positions heading into 2025, to take that loss in 2024 if you are a short and you're down in your short position, which all shorts are down in their short positions, and not carry that into 2025. And then the option activity, that's just always pretty much there. People just trade Tesla options. Tesla and Nvidia, like, you never have to worry about those stocks having little option activity. They always have a lot of option activity. And sometimes Tesla has more than Nvidia. Sometimes Nvidia has more than Tesla. But, I think today was very important. Bottom line, if the government gets funded and we don't have a shutdown that threatens the economy, then just to get back to, again, neutral on markets, you're going to see a pretty nice rally here. Consider the RSP. Like, could we bounce back to the 185 level? Could we get back to where we were in early November? Probably. What do you think that's going to do for Tesla at this point? Probably send Tesla into the mid 500s. So, sounds crazy. But yeah, today was a big improvement for markets with that PCE report. And good news is we really don't have any other economic data that's of size or importance throughout the rest of this week. Let's give you a little bit of a rundown. You have the Chicago Fed National Activity Index next Monday, durable goods orders on Tuesday, Wednesday, nothing, Thursday, nothing, Friday, nothing. Okay, so the trading days that we are open next week, you could fall into that seasonal pattern of bullishness. and there may not be too much to stop it. Again, if the government gets funded over this weekend, tonight, before the deadline, yeah, you're going to want to be fully invested in Tesla. Let me just tell you that right now. And honestly, I just see better things ahead for 2025. Now, I still do think there will be a correction at some point. It really depends how market sentiment shifts, over the next couple of weeks. If we do see a large rally, then maybe we get that correction in February or in March, okay, with some of the growth concerns. I think once we start to get jobs reports for January and February, which will come out in February and March, is when we're going to have the growth scare correction, okay? And that's really where I'm at right now. I think we've kind of got the sentiment correction already. Like, sentiment was too high. We got a 4% pullback on the S&P. Sentiment is now really negative. Like, I don't know how much more of a correction we need to reset sentiment. It's kind of already been reset. So I don't know. These are just some of my thoughts. These are the things that I'm thinking about right now. I actually think options in Tesla look a lot better now than they did before. Maybe that's just my perspective. Who knows? But if I were to put some probabilities on this, I think there's probably a 70% chance the government gets funded, 75% chance the government gets funded and stays operational, and maybe a 30% chance of a shutdown. So that's essentially saying there's a 70% chance markets rip higher over the next 2 weeks, 3 weeks, and a 25% chance or so markets crash over the next 2 or 3 weeks. That's kind of what I think is on the line here. So do what you want with that information. With that said, let me know what you think about this down below in the comment section. Have a fantastic rest of your day and your weekends, and I will see you in the next one.